Hey there! What if I told you there was a $2 trillion shadow market that most investors had no clue exists, but it's quietly offering savvy investors 10% returns with consistent monthly income? It's called private lending, and today we're going to be breaking down exactly how it works and what you can do to get in. If we haven't met yet, my name's John Newfer. I'm a private money lender, mentor, and trainer. I've funded hundreds of loans for millions of dollars, and for the last 8 years, I've been teaching others to do the exact same thing. So the first step to understanding private money lending is to simply look at the kingpins of lending, banks. You see, banks have discovered a way to leverage our deposit money into investments without actually calling them investments. So are banks lending our deposits into the stock market? No. Firstly, it's probably illegal, and secondly, it'd probably be a terrible place to deposit your money, and you guys know the obvious reasons. Are banks investing our deposit money into properties? No. They don't buy properties because that would incur way too much time, energy, liability, and so on. How are banks leveraging our deposits? Well, it's no secret. They take our hard-earned money, borrow against it, and invest in real estate-backed promissory notes, i.e. mortgages. Now, why mortgages? Well, we're going to do a deep dive today on why banks invest in mortgages. You know, what most people don't know is that you can do the exact same thing the banks do. If you just have $50,000, you could be benefiting from that exact same strategy. And by the end of this video, I'm going to show you a few easy ways to actually get started in this space. To give you some context, my day-to-day activities revolve around representing private money lenders and investors that lend their money on real estate notes, and it can be extremely lucrative. You see, the number one reason why banks like lending on notes, it's the consistent income. So lending offers consistent monthly income. That is the differentiator compared to most stock portfolios. When someone signs a promissory note, they are promising to pay every single month, which means monthly payments similar to a monthly salary. And if you don't pay, well, it's collateral based. And we're going to be getting into that a little bit later. Now, while dividend stocks are normally paid quarterly, they also can be inconsistent and even cut completely at times that are tough in the economy. Now, private lending actually guarantees payments based on agreed terms. Private notes get paid, they go straight into your bank account from a servicer, and it's basically mailbox money. In comparison to dividend stocks, where they end up landing in a brokerage account and some sort of reinvestment strategy or whatever the brokerage protocol is for dividends. Now, finally, there is a personal guarantee on promissory notes in comparison to the non-recourse nature of stocks. If a stock tanks, there's no recourse. We're going to talk more about on this later, and it's called equity protection. Now, to be fair, stocks do provide some equity if the values go up, and you can benefit. However, you must have the right exit timing to do that. And most dividend investors aren't focused on the exit. Now, in short, investing in private lending allows you to know what's coming in each month, making it easier to actually plan and live your life that you actually want to live without worrying about what's happening with the economy. Which actually leads me to my next point. Control over risk. See, with stocks, you're at the mercy of market forces. Prices can swing wildly based on news or economic events or election. And not to mention the inflated balance sheets given by these companies that are publicly traded. You see, you got to put your trust in somebody else who obviously has some other interests beside yours. Now, private money lending, on the other hand, gives you complete control over the risk. You get to determine what the borrower profile looks like, what location you're lending in, what FICO score requirement there is, what kind of repayment there is, what kind of interest rate there is. You get complete transparency and control over that risk that we're talking about. See, this is unprecedented in the stock market world. In no way, shape, or form is there the same kind of transparency and risk control in the stock market than there is in private money. Here's another big advantage: collateral. You see, private loans, especially in real estate, are often secured by tangible assets like properties, automobiles, or business assets. You see, if the borrower defaults, you have something to fall back on automatically. While stocks, on the other hand, they don't come with that kind of safety net. You're essentially investing in virtual paper. their value can drop in an instant without any physical assets backing them at all. And I mean, we invest in company stocks, and more often than not, their balance sheets are inflated just to attract more investors. It's a huge red flag in my book. And especially, check this out, if a company goes bankrupt and you haven't exited yet, you're actually the last in line to get paid. And you know who's the first in line? Private lenders. Now, anyone who's invested in stocks understands how extremely sensitive the stock market is to consumer sentiment. I mean, there could be a news event, an election, even a tweet that could send a stock skyrocketing or absolutely crashing. While on the other hand, you got private money loans that are totally insulated to that kind of thing. I mean, they're stable, they're predictable investments, and at the end of the day, somebody signed a guarantee to make a payment on that note. Private money is a clear winner in the market sentiment category. Now, there's something I wanted to get to in this video that's extremely important and mostly gets skimmed over when comparing the two models. You see, in private lending, there's a lot of protections. There's actually three-prong approach to protection. The first is in private money, if someone doesn't pay, there's a guarantee, there's a personal guarantee. So if someone doesn't pay, you can actually reach out to that person, negotiate terms, and get them to pay because they signed a guarantee on that loan, in comparison to stocks where there's literally no recourse if the stock market crashes. It's like, is the CEO gonna pay you because they didn't do too well that quarter? No, there's no recourse. Also in private lending, there's that collateral piece. Now, we talked about the collateral earlier, but it's extremely important. It's actually the key to unlocking the power of private money sits in the collateral piece of things, in comparison to stocks where it's like, okay, you have this paper value that can go up and down on a whim depending on how the market feels. And then finally, one thing that nobody really talks about is the insurance. You see, when you issue a private note to somebody on whatever the collateral is, let's say it's real estate or automobile, you can put terms in how they should be insuring that asset. So let's say you lend on a property in Florida. Well, guess what? You're gonna have to get wind and hail insurance. Oh, and is it a rental property? Well, I'm gonna have to make sure that I get paid in case you lose a renter. So we're gonna put a 12-month rent loss coverage in our insurance policy. You see, that's a three-pronged approach of why private money lending gives you so many protections in comparison to the stock market. And by the way, on the insurance side of stock market, correct me if I'm wrong, but I don't know of any insurance if your stock goes down other than puts and sells, and maybe get yourself a long-term life insurance plan to cover yourself. So anyways, very important. I wanted to get this in here and make sure I didn't miss discussing the protections you get in comparison to the stock market where there's literally no protection. So if you're looking for consistent income or more control over your risk, collateral-backed securities, and a built-in exit strategy, private money could be the perfect investment for you. So the big question is, how do you actually get in? Well, it's pretty simple. There are hundreds of debt funds out there that you can invest with that do this exact kind of thing, and you can get 8 to 10% returns paid monthly. Or if you want to really get the full experience, you could hook up with investors or hook up with a brokerage like me, where I'm going to present to you opportunities from real borrowers who have real investment properties and they need loans, but they can't get bank financing because they're either self-employed or they're a fix and flipper, or maybe they just inherited an investment property with a bunch of equity, but they can't get a conventional loan because of the tight lending restrictions that the banks have set up. You see, the infrastructure is already in place. Title companies, insurance companies, dock drawers, servicers to collect payments on your behalf. The mortgage business is decades old, and it's already designed for you to lend your own money. Now, for my final point, let's talk about your exit. You see, with private money loans, your exit strategy is actually built in. Either you collect payments until the loan's repaid, or you can sell the loan to another investor. You see, you have options that are actually aligned with your financial goals, unlike stocks where literally timing is everything. You see, I personally have friends and family that retired on portfolios worth $1 million, and overnight it was cut by 20, 30%. Remember that whole COVID disaster? Yeah, imagining retiring during COVID when all the stocks got slashed. And you come out of that situation, and guess what? You don't know how to make a monthly income outside of your job. So using your money to work for you is a huge problem that you're gonna have to solve. And if you don't have any experience solving that, good luck with a huge stock portfolio. So my proposal for you is to do your own research, structure some loans, and start building your wealth through private lending. The easiest way to actually dip your toes into this industry and learn about what a good deal actually looks like is to start representing private money lenders. You see, the crazy thing is that you don't need any licensing to get started as a commercial mortgage broker. Check out my commercial accelerator where I personally help you build a turnkey private money loan brokerage from scratch, so you can eventually start lending your own money. So I want to thank you so much for watching this video, and if you found it helpful, don't forget to subscribe, hit the notification bell, and leave a comment with any questions you have regarding private money or commercial loan brokering. And if you want more tips on this kind of stuff, check out my other videos. I want to thank you so much, and I'll see you guys next time. Ciao.